Hello everyone, my name is Matt Cincerello, and I'm the owner and managing partner here at U-Nique Accounting. You can learn more about what we do by visiting us at u-niqueaccounting.com. And while you're there, I recommend you check out our free stuff page where you can read our blog and check out downloadable guides like the top 10 cash flow mistakes that can cripple a business. Also, if you're wondering what I'm drinking today, I'm still drinking a lemon berry kombucha. I'm doing back-to-back videos here because I fell behind a little bit. And if you notice, my cup is bearing the hashtag Make Today Count. This is a slogan for my Best Friends Foundation, which is a close and personal not-for-profit that I'm a board member of. A link will be provided to a form you can fill out if you or someone you know needs help dealing with the impact of cancer in their life. So let's go ahead and jump into today's topic. And today's topic is 7 ways that business owners can get in trouble with taxes and how we at U-Nique protect our clients. There was a really good article I read on Inc.com a few weeks ago called The 7 Big Ways That Regular People Get in Trouble with Their Taxes. And it was a really good article. And if you go to our blog, there's a link there to go read it. And it compelled me when I was reading it, I felt, wow, we protect our clients from a lot of these issues. And I was like, we should write about that. So let's write about the 7 big ways that businesses get hit by taxes and how we at U-Nique protect you so you can sleep better at night. Issue number 1 is ignoring official letters from the government. I can't tell you over the couple of decades I've been doing accounting, but clients get letters and they never forward it right away. They usually hold on to it because it's not important to them. And then a month later you get it, which means that it's been too late to respond and there's another letter coming. It's just a cyclical problem that goes on with clients. So what we at U-Nique do is everything that comes with like business and payroll taxes, when our clients sign up with us as part of our onboarding process, since we do both business and personal taxes, every client signs a power of attorney form for their business so that we can have access to tax transcripts and letters for business and payroll taxes, as well as for them personally. And this allows us that whenever the client gets a letter, we also get it within a couple of days and can see the issue and address it right away. And it allows us to pay attention to clients' tax returns and make sure that, hey, if we said we e-filed it and we got a notification in our tax software saying the government got it, we can also now verify that all that worked and the government actually got it and they got the return that we actually did file. So issue number 2 is not filing returns when they are required. So there are taxpayers out there who just don't use an accounting firm and they fail to report their taxes, and then we'll find one and then go, hey, I've got like 3, 4, or 5 years I have to file at the same time because I need to catch up. And so while we don't do anything different here that other firms would do, we just make sure that when we get clients, we get them caught up where they need to be, and that we always file there and in the future on time. So issue number 3 is not designating what tax you're paying. Most accounting firms in this area are very hands-off. They will prepare your taxes, they will send you copies of your returns and some payment vouchers, but they don't help ensure that the tax is paid correctly. They'll give you instructions on how to do it, but they won't double check it. And a lot of taxpayers still submit payments to the IRS in their states via written checks. And as you've heard in other stories, we don't like checks because it leaves you open to fraud. But part of the issue with the check is that you have to write down a bunch of information on the check. Because again, at the IRS, they separate everything. And when the check gets separated, they lose the information. So on the check, you have to make sure to put, if it's business or personal, social security number, FEIN of the business, or social security numbers of the people, the year, the form the check is for. Like you have to put all this information on the check so that the IRS doesn't screw up how to apply the payment. And even after you do all that, they still screw it up. It happens all the time. And so what we do is we try to help our clients not have payments get misapplied. And so we'll walk through the process and give people 3 different ways that these payments can be made. And we always focus on electronic methods so that it gets applied correctly. And to this day, we still have not had one electronic payment from a client get misapplied. So that's why it's our recommended way. Like I mentioned, we give power of attorneys for our clients so that we can monitor that when we tell you to make a payment and you tell us you made the payment, that we can verify that they got the payment. And it's just one of those things that, like, going back decades of working with the clients, it was always an issue and we never knew if the payment we told you made got made. So we have solved that issue U-Nique. We walk you through the steps, we give you multiple payment methods, and then we verify that the payment got made. Issue number 4 is not paying your employees' trust fund taxes. And if you're like, what is that? Basically, it's when you don't pay your payroll taxes in to the IRS. There's the employer portion that the business has to pay, and then there's the amount that you withhold from employees that's supposed to go to the government from their paychecks. And so the employee trust fund portion is the amount that for instance, if I was working for you and you paid me and you took federal Social Security Medicare tax out of my paycheck and never gave it to the IRS, that's this employee trust fund portion I'm talking about. It's a very big issue because it racks up a lot of penalties and fees with the IRS. And it's one of those things that like you should never be stealing money, other people, to cover losses from the business. And so we easily avoid this because we force all our clients to use a payroll program like Gusto, where payroll is automated, taxes are taken out automatically, and the taxes are paid the government agencies automatically. So it ensures that you aren't holding on to the cash and never submitting it to the tax authority. It's always going there. And that way the cash that's in your bank account actually belongs to you. We don't have to worry about a surprise tax bill from a governmental agency because you forgot to remit them the money. So issue number 5 is playing fast and loose with facts, plus number 7 issue, which is not keeping good records. Going back a long time ago, a lot of accounting software wasn't as digitized. A lot of small businesses use QuickBooks Desktop. And because it's desktop, it was a lot of data entry. Paperwork was in a folder, and whether or not you kept good paperwork was up to the business owner. But when you get an audit with the IRS, having bad accounting records and then loosey-goosey facts and lack of paperwork is not a good thing. If you have good paperwork and good accounting records and everything is buttoned up, they're just going to audit you, have nothing to change, and walk away. And in fact, U-Nique, to this day, in the audits we've had with our clients, we're 100% right now still $0 change amounts on audits with clients. And it's because we have automated processes. We make sure that there's no missing cash transactions. There's no missing bank transactions that don't match a statement, and that we try to maximize the amount of paperwork that clients are saving for a transaction. And that way, when the IRS agent shows up and they ask for records, we have quick, easy reports to get to them, quick, easy documentation records, and systems where POS matches the accounting software to the penny every single day. And when you do things like that, the agent's going to have nothing to change because they can't find anything. And that's much better than having a loosey-goosey accounting record and then trying to negotiate tax change with the IRS agent. So issue number 6 is failing to report foreign bank accounts and income. This really isn't a big issue for the clients we work with and probably most of the people in America, but in the bigger corporate world and people who personally have a lot of wealth, there is this compliance issue with having money overseas in foreign bank accounts and not telling the IRS about it and trying to hide money from a tax point of view. So this is not applicable to a lot of you out there. But if you do have a foreign bank account and you have never told the IRS about it, you could be substantially penalized big time for it, especially if it's income you've never reported. And it's one of those things that the IRS has been trying really hard over the past decade and a half to get people to comply with reporting it. 10 years ago, they were being very lenient when people failed to report and then finally did it. And they're still being a little lenient, not as much, but the penalties and fees on not reporting that foreign bank account activity is much more stiffer, and it gets worse every year. So it's just one of those things that if you have it, you should talk to your tax preparer and make sure that you are reporting it if you're supposed to. And issue number 7 was having good documentation records, which we kind of addressed already. So these are in our eyes, the big 7, tax issues that business owners face, and the way that we at U-Nique handle it. So that way our clients can sleep at night knowing that if these issues come up, that they're taken care of and that they don't have to worry about it. If you appreciate our advice, please remember to like our video and subscribe to our channel for future content. Remember, until we see you next time, don't conform, stay unique.